Okay, everybody, just a quick explaining video on to give a little more clarity on what was meant in the session we did the other night about first signal versus multi-condition exits, or in other words, with the latter, some degree of confluence to guide exit decision making. It's not the usual way of doing things, but is something really worth exploring, something we're going to explore during the course. But even if that's not for you, it's worthwhile just giving this some consideration. So every new bar, we essentially have a question to answer. This is usually based on looking at the technical picture with perhaps the odd fundamental issue in there as well, such as proximity of a key data point, for example. And we have parameters that we use for decision making and ask the question, has a specific trigger level been hit? So in practical terms, the process is we have a parameter, we have a trigger, and then we take action. Now, exit actions can be one of three. Firstly, we hold all of our existing position. Secondly, we exit all of our open position. Or thirdly, we partially exit, suggesting that there may be signs that things are weakening in a particular trend, as an example, and perhaps taking some off the table now would be prudent. This is much more sophisticated than simply saying, well, it's halfway towards its profit target, let's take half off, which is the usual way people operate with partial exits. That's another story for another day, but essentially we've got these three actions we can take. So let's use an example, three potential triggers. Now, we can choose any triggers, but I've just chosen three that may suggest the trend may struggle to continue. So a failure to move, so perhaps it hasn't moved much, maybe less than 1 ATR in the last 5 bars. It may be that there's a proximity of the next key level, so the next resistance is less than 1 ATR up above where price action is now. And of course, resistance is called resistance for a reason in terms of it may struggle to get through that. And then thirdly, a decrease in volatility or volume. So perhaps over the last 3 bars. So what tends to happen is we adopt a usual first signal approach. So any of these, and whatever parameters we use, any of these are hit and we are out. So that's what we mean by a first signal exit. So we may have three parameters we're looking at, but whichever one is triggered first, that results in exit. The alternative, of course, is multi-condition, or what I'm terming exit confluence. For entry, we use a primary price action plus confluence factors. Why then do we, or could we not use the same approach for exits? Let's take those same three parameters we looked at in the last slide and look at the two options. Option one is a tick list. So we look at these and we say, right, if one is hit, then we're happy to hold. If two are hit, then we'll partially close the position. If three are hit, we fully exit. Now, that's relatively easy to implement, providing you're looking at those three and asking the question on every bar. The second option is slightly more sophisticated, but nevertheless worth consideration and something that we'd look at in the course as a potential alternative. So what we can do is we can look at all three options, the first hit option, the tick list option, or this third one, which is the composite score. So each of these generates a score depending on where it is. So a failure to move, it might be that we score this between 0 and 3. If it'll be a 0 if it has moved in the last 5 bars and it's higher. Maybe it hasn't moved in the last 3 bars and that generates a 1. Maybe it's 4 bars is 2, maybe 5 bars is 3, and so on and so forth. So we can come up with ways in which we can score these. Now, this is slightly more complex to action, but again, if you're specific in terms of what you're looking at, then it's not that hard to do. Additionally, of course, we can create a custom indicator like we did, as I'll show you right now, with this position health monitor. So you can see this position in the Euro US, and it doesn't matter whether we're looking at a short-term currency or index trade, or whether we're looking at a daily chart on a stock, the principles are the same. We're looking at the same things. And you can see here the price is actually not bad. It's really, apart from that last candle there at the close of the day on Friday, the price is actually still looking relatively healthy. But in terms of where the overall position is, you can see there that there is potentially a key level here. It was tested here. There was a pause here. So we are really close to a proximity. In fact, you can see on this indicator less than 0.2 ATR. Also, the energy has gone out the stock. You can see there got a little price move with a decrease in volume. That suggests that energy behind this move is failing. So in this case, we've got 2 out of 3. We might consider on this indicator to consider a full exit. Now we can set this up as to how we want to deal with this particular indicator, which I'm happy to include in the course. Then you can set your own input parameters position. And you can see there, simply because it is very close to proximity, and the energy has completely gone out of this trade, that it has scored those lower, and you can see it's considering full exit. So that's what we can do with this. You don't have to have a custom indicator, but it's where we can take this if you wanted to subsequently. And I thought it was a good way of illustrating the concept. So essentially, those are our three options. We have a one is hit all out. We have an approach with a tick list like this, or we have a composite score. We create a composite score based on the variables we're using to determine whether our trend is possibly flailing. But it all comes down to, of course, gathering evidence to find out what's right for you. And of course, we can get this the easy way or the hard way. We can scroll through chart after chart after chart after chart, which is very laborious, and often we'll miss things as we do that. Or we can use some of the technology that's now available to us, both from creating a short-term EA, testing those three approaches all at the same time over the last 2 years and seeing which comes out best. And or we can use some help from AI to do the analysis. That is what we are all about on the course. But most importantly, I hope that clarifies that we're covering today in terms of first or multi-condition exits. Hope that's useful. See you soon.